It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. And we're in an election year, which can cause people to psych themselves out about their investments. And so I want to talk about how you ignore the noise or how you react to the noise during an election year. It's something that happens every 4-year presidential election cycle, that as the hype builds up and the frenzy on social media that just feeds repeatedly to people that are partisans of either of the major political parties, people start to buy in to the hype that this is the most important election in American history and blah, 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 blah. Okay. Every election is important to participate in, but the reality is there is no Armageddon coming based on whether this party wins or that party wins. And I am one of those people who has such a different perspective because I'm not a loyalist of either of the political parties. And so for me, it's a different kind of feel that I have as an American who very much cares and loves this country, but does not feel like, any fellow, I love my fellow Americans. I don't feel like this person is this or this person is that because of they're with this party or that party. That's not where my head lives. And so I have a completely different perspective. But I recognize at the same time how many people feel that, oh no, everything I have is going to go away because. So that's not my game. And so I'd love for you to tune out the noise and worry much more about how do you handle your money. So we as Americans tend to feel comfortable if we do invest sticking close to home in the United States. And a lot of Americans who have employers that have publicly traded stock tend to ultimately, your potential risk, put a lot of your future in that company's shares, which if you're a longtime listener or viewer, you know that I put the kibosh on that. So where are things now? If you look at the marketplace, overwhelmingly, U.S. markets are very, very, very highly valued. Stock markets go through cycles where they are overly exuberant and then overly pessimistic. And the U.S. economy is doing, I know it's felt hard on individuals because of the inflation stuff, but the U.S. economy has been doing better than most any economy in the world. It's attracted foreign money into our stocks, and of course, Americans tend to stay close to home with their investing. And I do so much reading in the financial press, and it is so clear that there's like almost like just like a head shake going on, that Americans are ignoring the potential opportunity there is to invest overseas. And you look at the world's second largest money manager, Vanguard, and their recommendation right now is that 40% of the money that's in a stock portfolio should be overseas right now. In the bond side of things, almost a third. And this is similar to what a lot of other financial houses are recommending. But their investors don't want to do it. They just don't feel comfortable investing outside the United States. So if you think about this, we're 4% of the world's population. We're low 20s% of the world's economic activity. And even though we have been stronger as an economy over the last few years than pretty much anywhere else, over the long haul trajectory, there will be greater economic growth in other places in the world because they're coming from a smaller base. They don't have the per capita income that we do in the United States, not close. So I'm a big believer in this country. I love America. I also am very clear that I like to diversify my money and not just be with my investments in the good old USA. So if you read in a financial newsletter or your financial planner or whatever says, we really should diversify more where your money is. I know the natural reflexive action, is that the right word? Anyway, is that you say, no, I don't want to do that. I don't want to do that. Hear them out. And if you still want to just stay with your money here, do it. Now, I said things go through cycles, and the U.S. market is priced really high versus company earnings, which means that things are, by historical measures, overvalued. Does that mean I'm selling out the lion's share of my money that's in U.S.-based stuff? No, because you can't figure out when markets turn up or down. I play the long game, and I'm totally into dollar cost averaging, which is where I continually contribute on a regular schedule, month after month, year after year, in my widely diversified portfolio. Because that way, you're not reacting emotionally, you're acting methodically, which is key to long-term wealth and financial security. Coming up ahead, I want to tell you a lot of the hype right now could cause you to lose money anyway. So there's a lot of confusion about the stock markets right now. There was an initial euphoria on the part of investors after President Trump was reelected. I don't know quite what you call it when somebody was president, then wasn't, and then is again, but we'll just call it that, President-elect Trump. And then after that, there was kind of like a fall off, what's referred to as the Trump bump becoming the Trump dump. But the reality is world events and the profits of companies ultimately control earnings. Now we've got the fears of what Russia may do, and now Putin says, you stop taking away my candy or I'm gonna blow up the world with nukes and all that. Stock markets don't like that. And so I want you to know that initial euphoria for people following the election cycle, followed by oops and all that, know that over time, what really matters is, are companies making money? Are those profits increasing over time, decreasing? And what are you actually paying for each share of that company's stock? And right now, what you're having to pay for the share of an average company's stock is really, really high. The values of U.S. holdings are really abnormally high. So does that mean that I'm selling anything I own right now? No. Am I buying frantically right now? Not that either. Anyone who has listened to me or watched me over the last many decades know what I say concerning market conditions in good times and in bad, in times of great pessimism or times of great optimism, is I believe that slow and steady ultimately wins the race. I am Dullsville. I'm a dull person. I invest the same way. And so right now, no changes in what I'm doing. I don't expect the kind of returns over the next 10 years that I've had over the last 15. I don't expect that. I expect that returns are going to be more anemic because of an economic principle known as reversion to mean, that when values get kind of out of whack to the high side, over time they gradually find their traditional ratio of value. And so what I'm doing is what I've always done: 401k money going in every month, diversified. Money that I put into investments monthly just keeps going as it was, widely diversified. And that's my thing, slow and dull. And I know there are people who are always the hot money kind of people, the kind of people who love sports betting or going to Vegas or whatever, and look at investing the same way. That's not my game. See, my game is to be dull so that my life, I have the resources so my life can be exciting, so that I have financial security. That's what I'm about. And so, yeah, if the election cycle had gone the other way, there are people who would have felt morose and would have dumped what they had. And that would have been a bad idea too. That the whole concept that you should put huge money in or pull money out, if you have money, to do that with all at one time, that to me is something that if people enjoy that, go for it. But what I'm about is living on less than what I make and having long-term financial security. And we do live in a dangerous world. We've always lived in a dangerous world. And so you cannot overreact to events in the world that happen, either good or bad. You have to look at fundamentals. The fundamentals of the U.S. economy are rock solid. We are just about the most dynamic and successful economy on all of planet Earth. A lot of people didn't feel that way because of the brutal cycle of inflation that we went through COVID and afterwards. But we are still a solid economy. We have, compared to the rest of the world, very favorable employment trends and very favorable economic growth. I do feel, though, as I said at the very beginning, markets are almost certainly overvalued. But that doesn't make me change my mix. It just makes me change my expectations for what kind of gains I'll see going forward.